Hello, guys. This is Dave Santarelli from BreakingChartAlerts.com. And I've been getting a lot of questions lately about what is MACD, how do we use it, what does it mean, and how can we use it to make better trades? So in this short little video here, I want to cover these topics, okay? So first off, you can see we have a chart pulled up of the Qs here, right? If we want to see MACD, all we have to do is go to our studies, go down to MACD, and you're going to see these numbers come up, 12, 26, 9, and then you're going to see two lines pop up, okay? Now, first off, with the MACD, what this is going to do, it's going to help you identify either momentum or breakdown in the market, a breakout or breakdown in the market forming, okay? And how we're going to use this is to be able to find these signals to increase our odds of picking winning trades, okay? And this is just one example of a great indicator that we could use like the MACD. So first off, what do these three numbers mean down here? 12, 26, and 9. These are your exponential moving averages, okay? So first off, your 12-day exponential moving average minus your 26-day exponential moving average is going to be your MACD line. And if we come down here and just click edit, you're going to be able to see. The MACD line here is going to be our white line down here, and our signal line is the red line. That's really important going forward. I want you to remember that, okay? So the white line is the MACD, and the red line is our signal line, okay? Now, if we go here and look, we're going to be able to see that when we have our MACD line cross above our signal line, this represents a breakout in the market that we could take advantage of for a short-term swing trade, okay? When you see it crossing below like we do here, this is telling us that we have a sell signal, and it's either A, time to sell your long positions, or B, maybe we could short a position or buy some puts in the market here and capture that downturn here, that breakdown in the market. Okay, so here, as you can see, the MACD is crossing below that red signal line, and that's a sell signal of your long positions, or you could interpret it as, hey, this is a time to either short some shares or buy some puts in the market. Okay, now, so what are these three numbers? These three numbers are your exponential moving averages, okay? 12, 26, and 9. Now, what do these numbers mean? And how you get these values each day is your 12-day exponential moving average right here, your 12-day exponential moving average minus that 26-day exponential moving average. And that's what's given us that white line. Now, to get that red line, our signal line, all we're doing is taking the 9-day exponential moving average of the white MACD line. And that plots that down here. So combined, this is going to give us great signals when we get those crossovers, okay? Now, to take it one step further, people ask, what are these green and red lines, and what are the numerical values over to the side here, okay? Well, first off, these red and green, I don't know what you want to call them here, lines or these bars here, these are telling us how strong of a breakdown or breakout we're going to be having, you know, and as you can see, it's a great tell sign here. Like here, when we got the MACD crossing above our signal line here, and we started getting these nice green bars here, that's showing us signs of a great breakout. And as you can see, if you use that sign there of that MACD crossing that signal here, that signal line, and you entered into a trade on Qs, you captured a run from about 274 all the way up to, it got all the way up to over 300, but once you got that sell signal here on the MACD, that MACD line crossing below the signal line, you know, that's added about 286. So you had a nice run here from about 274 all the way up to about 286. So that's a really nice signal there to show you an entry and exit area using the MACD. Now, simple moving averages, a lot of people ask, what's the difference between a simple moving average and an exponential moving average? Well, simple moving averages are taking the closing price of the last, let's say we're using the 5-day simple moving average. So it's taking the closing price of the last 5 candles and dividing by 5. And that gives us our 5-day simple moving average. Okay, so if we wanted to plot that, we go up here to moving average and we can put in here 5-day. And you can see now here's that red 5-day simple moving average. Okay, so this number right here is telling us the previous 5-day average of these 5 candles. Okay, that's simple. So that's what a simple moving average is. Now, what is an exponential moving average? Let's use the same scenario here, but let's go to a exponential moving average. And let's use the same thing, 5. So if we put a 5-day exponential moving average now, you can see. Now this is giving us a little bit more downside and upside when we're climbing. Okay, so it's a front runner. Okay, it's less lagging than the simple moving average because the first candles are weighted more heavily on an exponential moving average than they are with the simple moving average where they're all the same value. So an exponential moving average is putting more value on the current candles there compared to where the SMA just averages all 5 and says, okay, here's the value of that. So exponential moving averages are going to give you a little bit better of a signal there as to the breakout or breakdown. All right, so now let's talk about how do we get those MACD numbers over here. You see these numbers, they go from 8, 5, 3, 0 down to -3, right? How do we get that number and what does it mean? Okay. First off, how do we get that number? Let's go up to studies now and let's go to all studies. We're going to go back over here to exponential moving average. And I want to put in the first number that we have in our MACD down here. You see that we have 12, 26, and 9. So I'm going to put in 12. I'm going to make that green. Okay. Now I want to go back up to studies. I want to go to exponential moving average. And now I want to make this the second number, 26. And I'm going to make this white. Now you can see we have the green, which is the 12-day exponential moving average, and the white, which is the 26-day exponential moving average. Now, all you have to do to get this number down here, remember the white line is our MACD line, right? Down here on the MACD. The white line's the MACD line, and the red line is our signal line. All we have to do to get these numbers over here is subtract X from Z. So we're going to subtract the 12-day exponential moving average from the 26-day exponential moving average. So let's just do this quick math here. Let's say 274.97. It's not going to be totally accurate because I don't know the true values. 274.97 minus 276.44. So that comes out to about minus 1.47. Now, if you come down here, you're going to be able to see that's right at about where we're at with that white line, about minus 1.47. Okay, so that's how you're going to see this. Now, what does that mean? Well, we could then further use that to see, okay, how strong of a breakdown is it? And where might it come back down to support? Okay, and this line right here, this white line, this is our 0 line. Okay, so you're looking for either a retracement back down to that 0 line before you pick up again, or you could be looking for support areas on the chart here as well. So that is how we use MACD and use it for breakout momentum or breakdown momentum with our trade plan. So as you can see over here, we're getting that white line, which is our MACD line, crossing above that red signal line, and that's showing a buy opportunity. If you're jumping in right here in the market on Qs, you're picking it up for around 186 a share, and then you're not selling it until you get that white line, the MACD line, to cross below that red signal line. So let's just say you got it back, you know, she's still climbing. Wait until you get it back here. where you get that peer cross, or even back here if you want to. Okay, but you can see it's holding support as it's climbing here. So you're really looking for a bigger breakdown for that sell signal. But let's just say you're using the MACD as your sell signal, and here you see a pretty decent sell signal. You know, that's upwards of $261 a share on Qs on this ETF. So you're able to take a nice entry here at about 186 a share all the way up to 261 using the MACD as your buy and your sell signal. So that's really important. And again, these numbers here, your 12, 26, and 9, these are the standard numbers when you put in your MACD. And like I said, 12-day exponential moving average, 26-day exponential moving average, and then your 9-day exponential moving average. And down here, your white line is your MACD line, and all that is your 12-day exponential moving average minus your 26-day exponential moving average plotted each day. Your red line is your 9-day exponential moving average of the MACD line. So it's really simple, and this for traders gives us great insight as to either a breakout in the market or a breakdown. So I hope this helped you guys today, and I'm really looking forward to doing some more classes. And if you have any questions or comments, please comment below, and I'd be glad to help you out. Alrighty, guys, take care. Have a great night. Stay safe, and God bless.